Alright guys, so I want to come on here and make a quick video, really just discussing like the math of a profitable trader. And a lot of times when people ask me about trading and things like that, they have the wrong idea about what it actually is. And there's a thin line between trading and what I would consider to be gambling. And so we're going to discuss, why discipline, risk management, not your win rate is what actually builds a trading account that survives. That's ultimately the goal, is to make sure we survive in the market so that we can benefit from, those breakout days. But let's go. So 4 numbers run your account. And we have win rate, which is how often you're right. And it's really the numbers a lot of beginners put a lot of importance on, but it's really the least important. Then you have risk versus reward, and it's how big winners are versus your losers. This is where the real edge lives, and edge is essentially just, what advantage you have in the market. And then we have risk per trade, and that is how much you stake each time, the dollar that keeps you in the game, so how much you are risking. And frequency, this is how many times you can repeat the eggs. And so you want to make sure you are able to stay disciplined and utilize your system to continue to get the results. So expectancy, the math decides if a strategy makes money before win rate enters the conversation. And a lot of people think you need a super high, win rate to be successful in trading. And a lot of times you see like those clickbait videos where you have somebody saying they have a 100% win rate or 80% win rate or something like that. But that's not necessary, guys. So, you can have a 40% win rate and still be a profitable trader and make money in the market. And that's just taking your win percentage times your average win and then subtracting that from your loss percentage times your average loss. And so if you don't know, a lot of times we use a system like 2R or 1R. You'll hear those numbers a lot. And essentially, think about the green as like 2 reward versus 1 risk. So for every, let's just say, dollar you are risking, you want to be able to make $2. And if you have that model when you take trades and you have a 40% win rate, you would come out with a result at 2R. So 0.20 per trade over 10 trades leaves you net 2R. So hopefully that makes sense for you guys. And this is an important chart because it gives you hopefully helps you understand what I mean by 40% win rate. You can still be profitable in the market. And on the left hand side where you see, the risk versus reward, let's just say you were risking, 2 to make 1. That is a negative risk reward ratio, which means you are risking double just to make, your money back. And a lot of times when people talk about trading, when I have conversations with them and things like that, they talk from a paradigm where they, oftentimes are having situations where they're risking way more than they are potentially making. And that is how you blow up an account. And if you don't understand, this chart or what it is your strategy is kind of expected to return and the frequency behind it, you'll end up lost and make, emotional and irrational decisions that end up making you lose money. But if you understand this and some of the stuff we're going to be talking about in this video, you'll have a much higher chance of being profitable and maintaining your strategy in the market. So you don't want to be doing this. As you can see, if you are risking 2 to make 1, you need a 70% win ratio to even, be positive. Even if you had a 60%, you'd still be negative. 1 to 1, still not ideal. You don't really want to be doing 1 to 1 trades where you, risk $100 to make $100. Because you break even, you get 50%. 60% you can win. But once you start getting into like the risk 1 to make 2, you see a drastic change, right? You can only win 40% of the time to make money. So risking one to make two is, very standard, ideal. Um, and I think this is a good minimum to have. 40%, after that, you just start making more money. 50% win rate, you make more money. 60, 70, same thing with 1 to 3. You can make more money. And for those of you who don't know, I want to give you guys an example of what like a 2R trade may look like. This is an example of a put, which means we are looking to make money on the downside. And so you see here, the risk reward ratio is 2. A lot of platforms will allow you to use a drawing similar as this to map out, your target price that you want to, close the trade at, and then your stop loss. And so it gives you the ratio, and you can, adjust it and things like that based off of what you see in the market, and then it'll tell you exactly, what your risk reward ratio is, and then you can adjust the amount you want to risk. So hopefully this gives you a decent idea of what that would look like in the chart. If we stop out here, then we lost some money, but we have an opportunity to make double our money. So that's the ratio. All right, and survival is the name of the game. You can't win if you're not still in the game. Position sizing keeps the account alive long enough for the eggs to play out. And that is super important. So when it comes to survival and strategy and trading, one of the biggest things that blows up people's accounts or makes them lose money is that they don't have good risk management. And we talked about this in the beginning, where disciplined risk management is the most important factor when it comes to trading, not even the strategy or the win rate. So let's just say you have 2,000 in the account and you risk an aggressive 5% of the balance on every trade. And this is even considered, an aggressive strategy, but it compounds well and it's nice, and I like it because it's 5%, a shrinking balance. So if you make money, you still just maintain a 5% balance. But this gives you, for example, a 20 trade gap, or just in general, which means after you will have to lose 20 consecutive trades to lose all your money and blow up an account. So even if we look at this, after 20 consecutive trades, that's still only $717. And drawdown, if you don't know, is basically how much you are down in comparison to, your total account. So not a blow up, but yeah, guys, you want to have a system like this and give yourself room and a gap for a strategy to mature. A lot of times people also get into the market and they start, strategy hopping and things like that because, maybe they tried it for a few trades and it didn't work. But as you've seen before, 40% win rate is enough to be profitable in the market. But you wouldn't be able to see that actualized in your trading, if you don't have enough time for a strategy to mature, because there aren't very many strategies that have like super crazy, 70, 80% win rates. And even those that do, which we'll get into later, you have to account for the frequency of the trades. So, and this is just a little chart to show you guys, the odds of, 20 losses in a row and things like that is unlikely. If you are following a decent trading strategy that you back testing and things like that. And I'll make videos in the future about how to, test a strategy and things like that without having to risk your real money. So we have growth. A small repeatable eggs compounds into a large number. The work is in repeating it, not in any single trade. And so for starting capital, let's say we go back to the $2,000, you have to risk per trade at 5%. Let's say our win rate is 45%. We have an average winner of 2R, average loser of 1. So our risk ratio is 2. And our break even is 33%. So as long as we, what I'm saying, we maintain a result above that, we will be making money. And we can see our growth here, and we'll discuss that a little bit later. All right. And this is just a chart to show you, how much you can make on different time frames and basically your frequency of trades. That goes back to what I was saying before. For example, a trading strategy that has a 70% win rate, but only trades, 3 times a month, may not actually outperform a trading strategy that has a 40% win rate, but trades, 15 times a month, for example. So these are things you want to be able to look at. You can calculate, and I'll show you guys my calculator later where you can kind of actually see these numbers in practice. All right, this is just showing you guys the eggs compounded and how trading can compound on itself. And so after 100 trades, for example, with these metrics that we discussed before, you would be up this amount of money. After 200 trades, you would be up 30,000. And there are strategies that trade at that frequency, in a year, for example. So you can make that money in a year. And this is showing you trade by trade. Let's say at 25 trades, the ending equity will be $2,816. You have a net profit of $816, and you go by that. Now, the reason I kind of wanted to show you guys a little small sample of like the trades is because people often ask me, because I live in a different country and I'm traveling, about trading full time, and some of them have plans where they may want to come here or travel somewhere else and be a full-time trader. But you need to be able to understand, based off of your equity and what you're starting with, and the system that you have set up and the expected outcome of it, what your net profit is. So if you need to be making $2,000, well, you might need to start off with $4,000, and you may need to be able to have this amount of trades. So your strategy and what it looks like may need to be adjusted. And this is just there to show you a little sample size of our calculator we'll get to at the end. But discipline, the math is only as good as your willingness to follow it. Rules cap it damage before emotions compounded. And my thing is, I will stop after 2 losses in one day, even after 1 loss. But you want to have a system where you aren't just in the market forever. If you go into the market and you have a bad trade, lose 2 trades, get out the market. Live to fight another day. You don't want to be trying to emotional trade and like you start gambling at that point. Like if it's not following your strategy, if it's not actually a plus entry for whatever strategy you're using, then don't try to force a trade, and just take what you are given. If I enter the market and I win the trade right away, and I'm good for the day, then I may not trade the rest of the day. I might just be done for the day, and I may go on to the next day. Okay, so we have 6 numbers to trade by. Rewards be accuracy, so aim for, like I said, the 1-to-2 ratio or better, and a low win rate still wins. That's important. So, and know your break even. At 1 to 10, you only need to be right 30% of the time. So when you're looking at the strategy, you're testing it, you're going through the back testing and everything like that, you can look at your win rate and see, okay, how effective am I trading the strategy? Do I at least beat what we needed to break even? Let it compound. So repetition, not a single trade builds the account. Risks fixed at percent every time. Slicing off the balance makes a total wipeout near impossible. Don't rush. Because people, like I said, they get too cocky. They get to feeling like maybe they come into the market and they get a few trades and they win fast, and then they start thinking like they have things figured out. And next thing you know, they are risking 20% of their account on a trade. And they may lose a trade. They're like, oh, it's going to reverse. And they double back. And now they down 2 trades. And just like that, they down 40%. And a lot of people snowball that and end up just blowing their entire account. Because in this market, you're going to have, loss streaks. You may lose 5, 6 times in a row. The best traders have this. Just like you may have times where you go on the win streak. But the reason we have those scaling metrics and our risk factor in that window is so that we can weather the storm when those times do come when we go on a loss streak. And like we've been discussing, consistent risk management repeated over time matters more than any win rate, and trading is a business, not a lottery. So, and then let me show you guys this. This is a calculator that I made, and the most important parts here will be highlighted in yellow. You can come here, and if you are interested in this calculator, click the link in the description, and I'll be able to get that to you. But it allows you to come here, adjust these things, your starting capital. You can put, what percentage you want to risk per trade, what you think the win rate would be, your average winner, loser. Then it has scenario where they'll show you the metrics behind 100 trades, 200 trades. And then we also have the trading cost, because there is a trading cost for most brokers. And then if you want to do margin, this is also here. But so you will come in and fill this all out. It'll show you kind of what we showed before, the scenario of what things look like in 25 trades. For like a 40% win rate, you'll have 11 wins, 13 losses. But we see we are still positive, still make money. And we see how this can, eventually scale if we were to continue down this path. And it has the growth paths, and you can go by actual trades here. It'll walk you through everything, the equity. It'll show you exactly the risk amount. So for example, if you don't have the ability to calculate it in whatever broker you use, you would be able to come here and see, okay, what your risk amount would be for the trade, so that you can keep scaling your account. And this is also good for those of you who are looking to potentially trade full time or see how that works. It gives you a general idea of what you can expect, based off of what you are trading and what you are risking to be able to make in the market, if you are able to keep following your strategy and be disciplined in that. And this is just a little more advanced. It shows the same thing, just with the actual R multiplication, risk versus rewards. You can come here and make notes and things like that if you want. But guys, hopefully that was able to, give you guys a little insight of how you can even maintain a 40% win rate and still be profitable, what risk management may look like, and how important that is. And then for the next video, if you are, if you like the way that I was able to explain some of this stuff and break it down, I'll go more in depth into when it comes to actual trading strategy and why I think it's overrated, but how you want to verify a trading strategy and how to back test it, how to actually go through that process, and then see if it actually works for you and evolve it to build your own edge in the market. So if you like that, give me a follow and we'll go and make that video happen for you guys.